Welcome back to FutureFunded. Today I'm going to be going through a very simple entry model on a simple SMC strategy that, like I've done before and I've showed you before, I've been trading for years. Now you can use this with both futures and FX, so let's jump straight into it. Understand the fundamentals of this entry model and to make it as simple as possible, because that's what trading's about. We want to make things as simple and easy as we possibly can. We don't want to overcomplicate anything, because most traders do overcomplicate absolutely everything and there's no need. All right, so if we just start on the absolute bare basics, we can see that the 4-hour time frame is trending to the downside. You can see it's starting to move to the downside. We've had a break of structure right here on the 4-hour. So yes, okay, we have got a potential upside move and we're now starting to push down, which could be a retracement to go even higher, but that can take a little while for that to happen. That might not just happen instantly. So there are trading opportunities within that. All right, and as you can see on the 1 hour, the 1 hour high is right here and the 1 hour internal low is right here. Price starts to step up, but you see how every single time it steps up, it does a failed move to the downside. So this attempted move failed to break this low. Does the same thing here again. This high failed to break the low. This high right here failed to break the low. So every single time we get a failure of that break of structural low, we know that there's a pretty good chance or a higher probability that price is more than likely going to come back up and sweep that high, because now that high has just become nothing more than an area of liquidity, an area where retail traders have their sell orders. Okay, and as you can see, every single time it failed, price just pushed up, swept the high, took out the stop loss orders, and then the move started again to the downside, failed, came back up, swept the orders, and then once again. So having that in mind, you can look at that and say, okay, well, what's price more than likely to do right this second? Well, considering that we've just gone through Asia session and price is now pushing to the upside, we're close to that high. We've got Asia high right here from this wick, but we know that there's a pretty good chance that price is probably going to want to take this out before we get that real move happening once more. Okay, all we have to simply do is wait for price action to play out for us. Let it do all the hard work for us. So we've got a high, a higher low, a new high, and then we've got a break of structure. So now we've got a break of structure on the 15-minute. We can now dive into the 5-minute. Okay, so now we've got a very clear break of structure right here. Now we've got two areas where there are points of interest. Now we know from back testing and from data, more than likely if price comes back up, it's more than likely going to want to tap the origin. And what I mean by origin is the earliest point at which price actually made the move to the downside, the very thing that caused it in the first place. This isn't the very thing that caused it. This point of interest up here is. All right, so we can essentially just ignore this and look at this as more or less liquidity. So we've got liquidity right here. All right, we've got even more liquidity down here from this move itself. So we know that there's a pretty good chance that price is going to want to come back up. And immediately once it does, do you see how it immediately just takes out all the liquidity and then taps into this area? All right, so now it taps into this area, we can now say to ourselves, well, the high has already been taken out. We're more than likely going to get a move, or at least an attempted move to the downside. Whether it's going to break the lows or not is irrelevant. We know that it swept the previous high, and now we've got a good chance of going to the downside, considering we've just taken out Asia highs as well. And we know that there's a lot of liquidity being taken as we speak. So once we get into this point, the only thing you need to necessarily look at is waiting for price action on the 1 minute. Okay, and all you essentially do is just do the exact same thing you did before. You wait for a move up, a retracement, and then you wait for one last sweep of price action. And once you get that sweep, you can then enter the market. You can place your stop above the high and have your stop literally just above this point of interest at about 5.7 pips, or you can choose to go slightly tighter depending on your risk tolerance, of course. I normally like to put my stop just above the point of interest, just in case we get another sweep. And then you can start at looking at aiming to the downside. Okay, so first targets then typically speaking, are going to be this break of structural low here. We know if we go back to the 5-minute time frame, we know that the break of structural low is down here because this is where price reverse. So we can look to take 80% of our trade off here. Then we can start asking ourselves, well, where's the next point of interest after that point? Well, the next one's down here. So then you can look to go down there for a 1 to 4.71. You can use this methodology on FX or futures. It doesn't matter. The same rule sets and skill sets apply to both futures or FX. All right, it's just the same institutional levels getting created after previous failed highs, and then you can use a 2-test entry model where price needs to sweep the first area of rejection because that is deemed to be liquidity, and once it sweeps that, it then stops out most or a lot of traders at that point, and then you can look to start entering the market. And as you can see, price just absolutely melts to the floor. You can take first targets off right here at 80%, or you can take 80% off right here, and then you can leave the remaining trade, remaining 20% of the trade anyway running, and you can move your stops to break even once you get down to hit. All right, so I hope that helps, guys. I hope that gives you a bit more indication of how to understand price action right now. You don't necessarily have to overcomplicate things. You don't have to look at every single time frame and draw out and map out every single level. You just need to understand what's happening right this second, because what might be happening on the daily or the weekly may not necessarily be relevant within the next hour, or same applies for the 4-hour or even the 1 hour. Okay, what might be happening right now may only apply in the 15-minute, 5-minute or 1 minute. So you just need to understand which time frames are going to give you the clearest possible direction over the short period of time if you trade short term. If you trade long term, of course the rule sets and the skills, they do differ, but especially with my strategy, I only need to be in a trade, or I only look to be in a trade for 20 minutes to half an hour. My trades are mainly only around about half an hour anyway, so I don't need to be looking at the daily time frame, whereas some people do. All right, so try not to overcomplicate things, keep things as simple as possible, and you'll start to see the rewards. All right, cheers guys. There you go, guys. That is the simplest SMC entry model that I've ever shown. It is the exact thing that I've always used, and it's the exact thing that I've always used when taking future funded prop firm challenges or getting funded and receiving consistent payouts. The simpler you keep it, the better. So make sure to go to FutureFunded, get your challenge, start implementing everything, and I'll see you on the other side.